Hello, Maverick traders. Welcome out to your market roundup for June 2nd. Corey here with you. We're going to go through meaningful news in the markets, what's moving, why it's moving, the latest on tariffs, all of the internals that are happening within the markets, which will lead us to up, down, and sideways strategies.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So as we look at the markets, it was kind of a commodities day, really. Dow, S&P, NASDAQ, Russell, they're all relatively flat, but oil up 3.9. This was on the back of OPEC Plus saying, look, we are not going to dump more supply onto the markets, and oil, well, less supply. That's going to drive prices higher. Gold up 2.7%. Gold miners, that has been certainly an area that has been strong in 2025. On the daily news, U.S. courts and tariff news are going to continue to be watched. Will the courts say tariffs are not allowed by the president? Where is this going? We still had some other news. 50% steel tariffs are in focus. Some stocks spiking because the expectation was, well, steel prices in the U.S. will go up. So companies like Nucor shot sharply higher today. Steel prices in Europe might be depressed, so European steel companies saw the brunt of that. Advanced decline line, 54% of stocks advancing. So again, very mild upside day in stocks. 50-period moving average still bullish with 7 out of 10 stocks above their 50 MA. Closer look at the chart here, we've got what's called an ascending triangle. So an ascending triangle is simply a level of resistance that's holding the market back, and then ascending, you can see the ascending lows. They are getting higher and higher, and the expectation is that you will move up and out from this consolidation pattern. And even today, we kind of chopped around, but you can see how there was a push to the upside. So the breakout seems to be intact and seems to be likely. If we look at some other other market charts, like the QQQ, same thing really. You have the consolidation, you have some rising lows, you have today's price action more bullish, and again, expectation would be further upside awaits. If we turn to the heat map, really a little bit of a mixed picture here, but energy, as one would expect, was up, but with oil being up 4%, boy, there's not as much bright green there as one would anticipate. You can see bright green down here in Newmont mining and the gold miners. So the gold miners reacted to gold's price spike, but the oil stocks, they reacted, but it was a little lackadaisical, no question about that. Other than that, a little more weakness in the industrial space, specifically rails and farm equipment and so forth. Now, if we look at the equity markets, we're still in an upward trending phase. Look, the moving averages are sloping upward, 20 above the 50. It surprised me at how strong we've been, but that is what's intact here. So let's look at some potential candidates. First, on the bullish side, we could look at a chart like Disney, similar to the equity markets, but I would say even stronger, even better. Huge gap that was a breakaway gap. And even though we've advanced a lot, notice how we're staying pegged to the highs. That says that the selling pressure just cannot push this stock down in any way, shape, or form, and then an upside break seems likely. So I'd expect more upside in Disney. Very strong chart, very good price action. Newmont mining, we talked about this. Gold miners have been in consolidation mode. If you want to call this a bull flag pattern, right? We've been up a lot, and this is the flag waving in the wind, and here's the upside breakout on volumes. Classic breakout pattern with further upside one would anticipate. If you don't like Newmont mining, pick your favorite gold miner, but look at those as potential candidates. Next, we've got a possible sideways trade. Now, Nike is all over the map, but that map leads us towards an area where we are compressing. The 20, the 50, they're crisscrossing, but they're going opposite directions. The price action is stuck at the moving averages. It's not to say it'll flatline, but as you go up, you'll probably come back down. If you go down, you'll probably come back up and stay compressed for the next couple of weeks. And then last but not least, if we were looking at a potential bearish candidate, look at things that have relative weakness. Look at the downward sloping moving averages. Look at how as the stock tries to bounce, it just keeps getting hit with more selling pressure and continues to evolve to the downside. So something like Merck, MRK, or some of those same names in that pharmaceutical space could be considered. So markets are consolidating, ascending triangle breakout looms. We've got non-farm payrolls on Friday. Now there's some other central bank meetings. You got Bank of Japan, the ECB, both expected to have some meetings. Well, ECB is expected to cut rates. Bank of Canada is expected to keep rates unchanged, but we're in this rate cutting cycle now, and central banks are going to continue to do that for now. We've got CrowdStrike, Dollar General, Dollar Tree, Lululemon. Usually when you start getting here into the retail space, you know you're at the tail end of earnings season, and that's just where we're at. Hope you've enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.